my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily charts and instead concentrate on the longer term view, using my weekly, monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. So let me now introduce today's longer term chart.
Today I'll be looking longer term at US dollar against the Brazilian real. Between about 2020 to mid-2024, this market had what I called 2 years ago, and I quote, wide if boring sideways market. That was the final follow-on action to the combined, if smaller in range, bullish ascending triangle and bullish ascending broadening wedge top formed back in 2019. The topside targets were achieved back in early 2020, where a somewhat strong follow-on higher, but since June 2020, the market has kept within a wide range, though with enough lower highs and lower lows for me to draw a bear channel that is verging on being a descending expanding wedge pattern, end of quote. I could have stopped there, and that would have described every year between 2020 even, and 2023, and into the start of 2024. However, in June this year, the market broke higher out of this dark blue highlighted bear channel, stabilizing over the broken upper bull channel line between July and October and heading higher since then. Now, 2 years ago, I also said, and I quote, "Now, this bear channel on its own is enough to warrant watching, yet I would like to throw something else into the mix. And it is this. Is there the possibility that the whole of the action since the start of the rally in 2020 is really a very large bull flag?" You see, I labeled this action last year as, and I quote, possible topping action, end of quote, and it was going to be such an action. Well, we should have perhaps seen more activity in that regard. Not that I'm saying that the drop down under 4.6 even in April last year was not a good sign of that. It is just, well, taking its own sweet time in coming, if it is coming at all. Hence why I have put the idea out there of a possible very large bull flag. There is no second flagpole to justify the idea as yet, but I'd rather say it than not right now. End of that quote, the whole quote. Now, this possible bull channel has become a reality, and bear channel has become a reality, and have set out some potential for such a pattern above. Thus, for a primary move higher, we could see prices reach target X in the 6.6 even area, not too far overhead. A more exaggerated and stronger move higher could see prices reach up towards target X1, up in the 7.05 area. Finally, the doubling up of the bear channel would have a more conservative potential, closer to the market of a potential target X2 in the 640 area. The closest to the market and eminently doable. So, what if these fail? Well, a true failure would see prices move back down, back within the bear channel, below the broken upper bear channel line, which is currently at 536.05, which seems a bit unlikely right now. So it all depends if the market has the legs to try higher to the various targets, but I do note the obstacle of the projected 50% overhead Fibonacci line at 666.52.
Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.